Over to you.
Perfect. Thanks, Sam. All right, so we start with the end in mind as one of the habits from Stephen R. Covey, I believe. We start with the ultimate goal in global payroll. When we start from the left and go to the right, I think it's pretty evident that these are the results that we want to get to. We want to make sure that everybody gets paid and the statutory bodies get paid. And as it's currently National Payroll Week, at least in the US and the UK and probably across the world, I've seen a post that 70% of the revenues of the IRS come through payroll. So we might want to get those results accurately and on time. And of course, pay slips, or is it pay slips or paychecks? It depends on where you sit. In my country, it would be a loonstrook. In Germany, it would be a Gehaltsabrechnung. But anyways, we want to get those in various formats to the employees and workforce and accessible anywhere. Of course, we need to do those regulatory filings that are more and more digitized, although you will find countries where this is still done manually at a local office, or even, I think, in the country where you're residing, Sam, if you would register a starter late, you would still need to go to the regional social security office in person to register them to avoid a fine. So although we might feel like we're very much digitized, sometimes we're not. But still, we as payroll professionals need to make sure that we do those filings, whether in person or hopefully digital. And of course, our beloved friends from finance do want to get those files to record the labor cost. Now, to get these results, we do need to put in a lot of effort, as most of us know. So what we'll need is accurate, timely, complete, and compliant approved payroll results across the globe or across the countries that you're responsible for. And to be able to do that, this will bring us to the topic of the webinar. You will need an effective and efficient global payroll control framework. Now, for those of you who know me, this is one of my favorite topics, making sure that we get those results with a very effective, meaning we have ensured that everything's accurate, and a very efficient, meaning we've done it in a very automated, not resource-heavy way, control framework. So I would think that brings us to the next slide, Sam. I love design principles because it sets the scene of how we do things. So if you think of design principles in the context of controls, I've listed these two that I've applied in my 17 years ago, and I would most likely apply for the next 17 years. So the first one on the left is we operate and evidence globally standardized controls, focusing on mitigating key risks, allowing local deployment with global consistency. Now, I've rehearsed that sentence for a few times because it's a very heavy sentence, but what it basically says is, whatever the country we're working in, we want a standard set of controls. And we want those controls to not just be done because we've always done it that way, or we run a control because something happened 10 years ago at this business unit in that country that caused a problem, and therefore we implemented the control. No, we want to mitigate actual risks. But we do recognize that global payroll and especially local payroll is hyperlocal. So there will be certain business contexts where you might have a head office somewhere and a factory somewhere else. And various countries have different kind of nuances around starters, leavers, taxability of certain items. You would want to allow for that local deployment, but you would want a global consistent control. That balance is kind of the holy grail of controls in global payroll, and we'll get to some examples later. So that's the first design principle. The second one is that we don't outsource processes to abdicate from the accountability for compliance and commit to ensuring compliance to the local level. I once had a manager who said, you don't outsource to save cost, or you don't outsource to abdicate from accountability. So this would mean that although you outsource a process, you as company or organization and registered for payroll taxes are still accountable for your compliance position, whether you do it in-house, whether you do it outsourced, you do it through Payzaar or someone else, you're still accountable because they will knock on your door for audits. Therefore, you need to make sure that the whole process in which a vendor or an outsourced partner plays a role is watertight. Now, to bring it together, we need to have standardization across the entire landscape. So regardless of your vendor, your service level, in-house or outsourced, and be always audit ready. What I used to say to my team is we need to get into a state that if we get a request from audit, that we're actually kind of happy because we could showcase that we've done our work and that we're absolutely compliant. So we don't need to worry about anyone knocking on our door, because we'll welcome them as if they were coming for tea and biscuits. Now, let's find out how to do that in the next one. Merci beaucoup. All right, so what I'm going to talk about today is risk management and control management. Because we just had a first design principle where we said we want controls that mitigate risks. Well, to be able to do that and to know that, you also need to know the risks in your payroll processes across your entire scope. So therefore, we need to look at risk management, which you can define as the ongoing process of identifying, assessing, and categorizing potential risks. Now, sometimes this feels like a daunting task to assess risks, but I can tell you it's worthwhile doing. And I'll tell you in a second. Ooh, the cliffhanger. All right, that brings us to control management, because we have risks and we have controls. And control management is all about designing and deploying or operating a fit-for-purpose set of controls. Now, the fit-for-purpose piece comes back to design principle 2, where you want an efficient and effective global control framework. That goes back to the first piece, that you want to mitigate risks. Now, before we go into controls, I think we'll do a little bit of a deep dive into risk management pertaining to global payroll. For anyone on the call, I would welcome you to have a conversation with your managers, and then especially with someone from either audit or finance, typically, to understand the risk profile of your company, which you could break down into 3 conversation points: a risk appetite, a risk capacity, and the risk tolerance. Now, as Sam mentioned, we hope that with these slides in the handout, you will have some key takeaways for you to take back to your company, so you don't have to think about everything yourself. But what I would do is repurpose this slide to your needs, but present it to a group where you could start understanding your risk profile. Because if you know the risk appetite, you also know the willingness to take risks in operations. And practically for payroll, that means, hey, you might have a global benefit that you might perceive in some countries, or the headquarter country, for instance, the US, as non-taxable. Now, that doesn't mean that across your entire scope, the same benefit would be treated as non-taxable. So the natural response for a payroll professional would be, we need to have clarity on the taxability of this benefit across the entire scope, because otherwise you might be non-compliant, which is 100% true. However, to be able to do that, you most likely need to hire an employment tax firm, or you need to ask your payroll providers for their assessment, which inherently would be cost. And then you get into the risk appetite zone, where you say, okay, are we willing to take the risk that we might process this as non-taxable, while we recognize that it might be non-compliant in some jurisdictions? Then you get into a materiality discussion, where you say, okay, what's the total dollar value of this benefit? What would be a potential risk? And are we then willing to take the risk? Which brings us to the risk capacity. What's your ability to take risk? What's your company profile? Are you a very high-speed company that's willing to take some risk and has the ability to consume any fines or consume any immaterial damage? And this kind of then boils up to a risk tolerance, which you could define in, performance goals. Could you say, I want to be 95% compliant in all of the countries that we're in? Well, you would have a hard time to find anyone who would actually state that in writing, to say, yes, I'm willing to not be 100% compliant. But in practice, through actions, that sometimes is what companies do. So when you are designing your controls, or when you're looking at vendors, you need to understand the risk profile of your organization. And if you currently don't know that, I would encourage you to start doing that. All right, Sam. Sam was the excellent driver. All right. So when we think about risk management, developed a pretty straightforward 5-step process for you to start implementing at your own organizations. The first one is start identifying risks. Now, this might sound like an exercise that's out of scope for payroll. It's actually not, because this whole process could be part of your regular team meetings, whether it's weekly, monthly, where you assess your risk. And I will close the window now, because I believe the kids from the neighbors are having a wonderful time jumping in and out of their pool, because the summer has risen from the ashes like a phoenix in the Netherlands. It's 35 degrees, so the kids are out. Just close the window. All right. So what I was saying is you could include this in all your team meetings. Once you've run a payroll, you said, hey, has something gone wrong? What could be a potential risk in the future? Do we need to assess that risk? Is it worth actually mitigating the risk? What's also part of it is within your own scope, but talk within your stakeholders' engagements. Talk about risks. I think Sam and I have done a webinar 2 or 3 months ago about stakeholders, who there are internal, external stakeholders. Make the risk profile a standing agenda item within those meetings, because there might be something happening in the HR space, in the finance space, in the tech space, in the legal space that might become a risk for you that you need to start mitigating. And once you've identified those risks, you're going to assess it, you're going to analyze it. Is it really severe enough? You're going to classify it as key or non-key risks, something that we linked to controls. You're going to draft a risk response, and we'll have some examples in the next slide. And then you're going to monitor and review those risks, because once you've first listed all the risks, then you have a baseline that you can start reviewing on a basis. Yes, Sam, it's okay to go to the next one, because I think we have 2 examples of risks, pretty common examples within the global payroll space. And if we go on the left, you see how you could describe those risks in a very standardized manner, right? A risk description is typically, this is the event which is caused by and resulting in. So that's typically the makeup of a risk. An event caused by, resulting in. So basically cause and effect. If you look at the first one, it could be inaccurate labor cost reporting in the GL caused by incorrect mapping of payroll output to accounts, resulting in material financial misstatements. This is a real risk that resides in any payroll, right? It's a risk, but it doesn't mean that it's a critical risk, because the likelihood and the impact differs per country. And this is where you'll have a conversation. The likelihood of it happening here, which I made up, was possible on a scale from 1 to 3, because maybe it's not as automated as you want it to be. Maybe there is some manual manipulation from the payroll result output to the GL entry. So it is possible, although you have the best staff out there, they're still humans. They might be tired, there might be a copy-paste error, there might be something of a material misstatement, or a provider has provided you with some wrong inputs. So it's possible that this could happen. The impact of it is intolerable, because maybe you're a publicly listed company that's on a strict SOX regulations. You can't have material misstatements, because you might need to open up the books with all kinds of fines and accruals for future misstatements, because your processes aren't in order. Therefore, the impact is intolerable, which brings you to a risk score. 2 times 3, let me do the math. Yeah, that's 6. So your risk score is 6. With out of a scale from 1 to 9, because the likelihood goes from 1 to 3, the impact goes from 1 to 3, so the highest score would be 9. 6 is a relatively high score. So in this example, we've mapped this as a high risk. Now, you've built this picture, and now you see how we're going to respond to a risk, which 2 basic responses could be: you could mitigate the risk, therefore we put in controls to make sure this doesn't happen, because we just assessed the likelihood is possible, but the impact is intolerable, therefore we mitigate it. If we move to the right side, it could be, oh, sorry, Sam. Sam doesn't like the second risk description. Sorry, Sam. All right, I'll not spend too much time on it then, Sam. So this would be untimely and incorrect local payroll tax filings caused by negligence of providers and incorrectly approved payroll results, resulting in non-compliance and financial exposure. Another real-life example within payroll. However, this hypothetical company has assessed the likelihood is improbable, because they might have a lot of great vendors. They might have a tool of like Payzaar on top of it to track their compliance status. They might have very good in-house teams. They have a very good control framework. So it's very improbable. However, the impact still would be intolerable for the same reasons as the financial misstatements, because it's a listed SOX company. But the risk score is 1 times 3 is 3. Therefore, it's a medium risk. And therefore, you're not going to mitigate it, but you're going to monitor it. You're just going to monitor the progress. You're not going to do every little detail on it. And there we have an example. Yes, Sam, now we can move to the next slide. All right, which brings us to control management. And the question I often get is, where do I start? Because in every conversation I have with wonderful payroll professionals and global payroll managers is, they all have controls. If I then ask, have you written it down somewhere that you operate the controls? Sort of. Okay. So how do you then show that you're doing it, and how do you evidence it? Yeah, we kind of do. Okay. So therefore, I sometimes say designing controls within global payroll is actually an art in itself to do it right and in a very structured manner. Not saying that there might be currently controls that are failing, but the overall control management is more than operating a good control itself. So when we think about the design principle, we need standardized controls that allow for local deployment to ensure compliance locally. That means that controls should be flexible enough in the design itself to satisfy that need. Now, that whole balance around global standardization, or regional for that matter standardization, and local nuances, that's kind of a balance that we all try to strike. Now, let's take a sneak peek of how to do that. So, like the risk management, we gave some examples, and these are very important to think about. So we have how many? 1, 2, 3, 4, 5, 6, 7, 8 different elements of designing a control. And I'll go through a few important ones. So you would have a control classification, which could be key or operational. An operational control could be mitigating a non-key risk. A key control could be mitigating a key risk. Now, why is this important? If you're building your business case to automate or do anything, you would want to link this to, hey, I need this investment or this automation or this headcount to operate this control, which we've all assessed in our right minds as a key control, because it's mitigating a key risk, which has an impact of intolerable and could lead to financial misstatements. Then you have a different conversation and a data point to sell in terms of your storyline. So if only for one thing it would be worthwhile listing your controls, it's to get your business case. Now, in terms of control types, you would always want to balance between preventative, one that prevents something to happen, or one that's detective. You could argue, I only want preventative controls. Yeah, that's fine, but something always slips through, or there's human behavior, or there's a risk of collusion, right? So you would always want a good balance of preventative and detective controls. Now, of course, we're a tech company, Payzaar, so we would also want to look at the control methods, moving from manual to automated, or at least IT dependent. IT dependent means, hey, I get a system generated report that a human still needs to review, right? In the near future, that will be AI. But to be honest, nothing beats EI. That's us. We would still be required anywhere. Now, then you would look at the last one, and I would want to, last two, actually, I would want to mention the control timing, right? You could tie to a payroll process or payroll stages, which could be, what would you want to do with pre-payroll? What do you want to do in run payroll? What do you want to do in post-payroll? That's something that we have later as well. And then the local nuances is where you start balancing out the whole global piece of this. And you might have local parameters. So for instance, in a country where you have 10 employees, it doesn't really make sense to set a threshold. You might just want to review those 10 employees. If you're reviewing a payroll of 10,000 employees, you can't, or you don't want to review everything if you're not automated. So you might want to set a certain threshold, or you just need to evidence that you reviewed all the payments above a certain threshold. You might want to be able to set a certain frequency that's dependent on locality, because the filings are on different matters. So this is kind of how you would design a good control. Thanks, Dan. We can move to the other. All right. So what I alluded to, we have pre-payroll, run payroll, post-payroll. If you've seen webinars before, that's what we do. We've now linked it to the Payzaar workflow stages. So in Payzaar, there is a module called operational control, which kind of unifies the whole workflow and payroll process, regardless if you're running payroll in-house, if you're running payroll outsourced, if you use a local vendor, a regional vendor, whatever you do, it is hard to argue that it doesn't follow these consecutive steps. So this is what we've done in Payzaar, and this is what we'll use for the rest of the webinar to kind of guide us through which type of controls do we see across our clients. For me, in my 17 years of running global payroll, within our team that sees a lot within the environment, what do we see as common controls mitigating common risks? So we have 6 workflow stages tied to the 3 payroll process stages. Really important for the rest of the webinar. Now, no worries, we won't do a quiz afterwards for you to remember those 6 stages, but once you get the handout, I'm sure you won't forget the 6 stages because you might implement them yourself. All right, Sam, that brings us to the set of controls, I think. Yes, we're starting with data preparation. Arguably, 60% of our time sits in the first step. Because of course, we receive all the data that we need from HR or other people exactly on time, exactly in the format that we need it. Okay, then we all wake up. No, that's not really what happens. So we need to make sure that we have solid controls of sort, whoever the sort is, whether it's automated or manual, to payroll input validation. Now, if we go from left to right, we have data input transformation, because typically the source systems that we get our data from don't like our data structure. Think about the big HCM systems, Workday, SAP, SuccessFactors, whatever it has, and you need extra data to put into your payroll system. It always needs some kind of transformation because the data model is different, right? It could be male, female in gender in a certain HCM. It might be 1 and 2 in a payroll system. You need to transform data. So you want to remove the manual manipulation of source files for all sorts of reasons known, such as segregation of duties, audit trail. You want to have transformation logic within a system that's systemized and auditable. And then you allow for global and local files and reports and transform it in a fit for purpose manner. So, the famous example, a Kirchensteuer in Germany, or applying wage tax credit in the Netherlands, or a certain address that you might need in China that drives a certain location and a certain tax rule, you would want to localize the data transformation. And also you would want to find a home for the homeless data, which are those local payroll fields. And HCM's not interested in it at all, but a local payroll needs it. So you need something in between to find a home for the homeless data. Now, for that data that comes to us, we also need data field validation rules. A social security number must have a string of X numbers. In the Netherlands, your social security number actually has an 11-proof calculation method on it. It should always equate to something. All of those validation rules you want to get built in. Again, it should be numerical, text, dates, and you should be able to set it on a country level. You have a global set of data, you have a local set of data. Localize the data. Then, as automated as you would want to be, you could be with Payzaar or other platforms. Let's face reality, there's always some data entry that still needs to be done manually. Either because you get a late entry or a single data error holds up a full integration and you're on the clock to submit data, you might want to use a functionality. However, that's of course a risky part of payroll. So regardless of automation, there will always be last minute requests, and you need to have a systemized 4 eyes principle, which aren't 2 eyes looking in a mirror. It needs to be 2 different set of eyes, one during the data entry, one during the review. This is kind of your basic set of 3 controls in the data preparation phase. All right, Sam, let's go to payroll approval. The moment that I always enjoyed most, especially if you have outsourced payrolls, you've completed data preparation, submitted everything, and then the waiting starts. And my wife asks, Max, what's happening? I'm waiting. Oh, you're waiting for payroll results. So she knows nothing about payroll, but she knows by my vibe that I'm waiting for payroll results. Okay, so this is when the payroll input to output validation starts, where I've seen this for these 4 controls being operated systematically. And I've actually added by Eduardo, thank you if you're on the call, I'm not sure if you're on there, a payslip and GTN reconciliation to it, because it is really a common control. Start from left to right. So there's a variance control. A variance either percentage or dollar based between pay elements, either per pay group or per employee, from a period, the current period, to another period, which could be the prior period. But if you pay quarterly bonuses or quarterly commissions, it makes no sense to compare it to the last one, because your tax will be different, your total gross would be different, your variable pay will be different, your net pay will be different. And you find yourself explaining it with, quarterly bonus time, which is not really an explanation. So you might want to then compare it to a comparable period to review fluxes. And again, you would want to be able to set the parameters of the control to the local needs, either a percentage, a materiality level, or a dollar value. Now, sometimes I need to explain what the difference is between a variance and a threshold. A variance looks at period to period. A threshold looks at a certain value of the current period above a certain dollar, or you could even say percentage threshold, to review outliers. Because you could do perfect source to data input processes, but it could still be that there's a human error in upstream who said to someone, hey, you're not going to get a 10,000 bonus, but a 10 million bonus. Oh, sorry, typo, but we've read it through, right? You would see it in a variance, you would catch it in a threshold. And again, you want to avoid outliers. And then you want to have, which is I'm really excited about after having joined Payzaar for 3 months and having seen this in action. I think there's even a YouTube webinar live demo about that, Sam. I think this functionality we had early on in the year already about the automated data validation. Because let's face it, what does Payroll do? We create spreadsheets. Back in the days, some still in the present time, right? Create spreadsheets to validate everything we've submitted as input. Does it come back in the GTM? All kinds of formulas, VLOOKUP, match. What if you would have automated data validation? Because you need to validate anyway, right? What have I inputted? Is it in the outputs? You need to have 100% validation across everything. And our mantra is that do more with less. Review differences only for all countries. A standard validation. Now, the third one is something that's not fairly systemized yet, but it kind of builds to the knowledge of the payroll professionals. Yes, there's a lot of technology out there. Technology is still managed by humans, at least nowadays. What I would always encourage you is do a mathematical calculation of the payslip from gross to net, either recalculating tax and social security by hand, or doing just a mathematical piece of it to make sure that it ticks and ties. And then match it to the GTM, because what could be on the payslip should be on the GTM, but there might be a mismatch. You never know. There might be a mismatch, so you might want to do a reconciliation. I do see this scenario as kind of more an optional one, but I've been in organizations before where external auditors have demanded me to do this control because we were too reliant on A, the outsourced party, and B, their system. So they wanted us to make sure we look at the mathematical piece of the pay slips to ensure reliability of the financial statements that include the payroll costs that come from approved payroll results. So these 4 controls, your standard set of controls for leading up to payroll approval. Which brings us to payroll outputs, I think, Sam. And one of the most important outputs, of course, which we've mentioned already, it's tied to that example first risk of material misstatements. With all the controls we've done by now, we're pretty sure our input was correct and it's correctly processed. So we've approved the payroll results. Now we need to make sure those results go into the financials as quickly as possible, and not payroll approval, let's crunch the numbers in Excel, 4 days later it hits the GL. No, instantly. So we have a financial posting run, automated GL file postings and systemized reconciliations to local GTM reports. You need to rely on a GL file tying to an approved GTM. And you can localize the mapping of COAs, chart of accounts, to formats of the enterprise resource planning or EAPs, and maybe some additional data input. Because let's face it, not all local payroll systems provide you with all the details that you need to do the bookings. There might not be accruals for extra pay periods. There might not be vacation accruals that you require. So you would actually want that to hit in the same GL within a standardized platform. And then we have, of course, accounts reconciliation, whether it's the cash posters who do it from the bank accounts, the tick and tie against the liabilities, or you would do the P&L reconciliation. You would want to have account reconciliations done. Although you could argue, at least in Payzaar, once the payroll is approved, it's automated into the output. So you could also do it with IT general control, so ITGCs, right? If you would set up your systems in such a way that account reconciliation is not needed. Just let that sink in. What if account reconciliation is not needed because you've systemized it? It just becomes an IT control. Take out the manual labor. You could argue, what would I be doing then? Well, you'll be able to spend more time with your spouses and not work 70 hours, work 40 hours, and maybe spend 5 times of the hours looking at continuous improvement rather than crunching their numbers in Excel. All right, off topic, but let's go on topic again. Let's go to payslip distribution. By the way, Sam has invited all of you to ask any questions or leave any comments. Please do so. It makes it a little bit more interactive. All right, payslip availability. So just a confirmation that the payslips are distributed, right? Which should be automated, but still you would want to get the confirmation. You would want to have it scheduled, not too early, not too late, right on time. And you want to localize the payslips to local needs, because a lot of countries still dictate in law what type of pay elements or what type of data elements should actually be on the payslip. Some even dictate the format of a payslip. I believe France is one of them. If you would review a French payslip, well, good luck with that. But you might want to give them also an experience around a standardized payslip. But we're talking about control, so make sure payslips are available. All right, then we have outputs. We've distributed pay tests. We're going to payment approval. Thanks, Sam. All right, so two major payments need to happen. We need to pay the employees, so net salary payments. We need to pay compliance payments, which could be one or multiple, depending on which country you do it. Some have separate social security or labor cost payments. Some have separate wage tax or income tax payments, right? So the net salary payment execution, you should automate and evidence, which is a keyword, evidence the net salary payment process. One has provided the file, one has reviewed and approved the file. There might even be a second layer if it increases in terms of threshold. And you would want that process harmonized, whether it's in-house or whether it's outsourced. And you want standardized pay dates as much as possible, which is not really a control, but it is an operational efficiency. And it kind of plays into design principle 2, where you want to have effective and efficient controls. And also around the end-to-end payment process. Now, similarly, you would want to have automated and evidenced compliance payments. And you want to tie that to any filings that you've done. So therefore, you would want to set up a compliance calendar with those payment deadlines in it. I think that kind of brings us to the statutory filings. All right, I want to spend a moment here because this was linked to the second risk that we've seen. Although the risk response, if I recall, was only monitoring, it still states a commitment that we monitor the actual filings. Now, if I would ask any of our prospects or anyone in my network, do you at this moment have any insight into if all your local filings are done or not? Not a lot of people say yes because of X, Y, and Z reason, because there's a local team doing it. We don't have a central platform. But I would say, would you not feel rather more comfortable if you know exactly when which filings need to be done and if they've actually been done? Well, then everybody says yes. Yeah, of course, because it's also a common control. Your employees wait for it because a local filing to a local social security agency informs the agency of your employment relationship with your employer. It informs you of the wages you have earned, and therefore if they can claim a certain social security benefit. Therefore, compliance filings is not just an afterthought, it's actually core to the employee experience because they rely in their automated income tax returns to be fed by their monthly or whatever occurrence there is, payroll tax filings. And you would want those filings to tie to the actual payments that are done in the prior step. And you would want to set up those filing calendars to tailor to any of the local deadlines and filing requirements. All right, Sam, I think we've kind of ran through all the different stage controls, which brings us to some of the controls that will overlay across all the workflow stages. So this kind of has 3 different controls. So you would have RBAC, which is a role-based access controls. You would want to define user roles and manage their access, right? You would want to make sure that someone who has access to a certain country actually should have access to a certain country, or someone who can approve payroll results has a system role to be able to do that, and therefore someone who shouldn't be able to approve a payroll has restricted access. You know, one of the most standard controls that you would see across any platform is role-based access controls. Now, if you're working within different types of tools, this becomes very, very difficult because how do you evidence that you have role-based controls across your multi-vendor, multi-system landscape? That's quite difficult. Or you could have access for someone who is in HR or in finance who might not have have access to employee level controls or employee level data. So you'd want to do that systemized based on role-based access controls. The other one is something that I always used to do with my team, is payroll calendar segregation of duties. You would want to per pay cycle set roles, which you could divide into preparer, someone who does the data preparation and who also does the review of the payroll approvals. You would want a reviewer, a second person who looks at the data preparation before it's submitted. And you would want someone who approves the payroll within the payroll approval. And ideally, this is linked to the role-based access control. So whatever SOD role you would give someone in a payroll calendar, you would want that to be systemized in RBAC, in role-based access controls. Why would you want to do this per cycle? Because you could argue my team members just do XYZ country and they always do it. Well, you would want to remove person dependencies, not remove persons, because payroll is a people business and will always be a people business and will never be replaced by AI or whoever invents some new technology in the future. But you do want it to be not person dependent. And why is that? Because that person doing India or the Netherlands or US or South Africa should also be allowed to go on leave without their laptop. So you want to remove those person dependencies and therefore switch. I used to do per quarter, some countries per 6 months, and then you would have an internal handover. And whenever you do a handover, you start noticing, this might be more efficient because I've learned that from that reason. So you want to set up those payroll calendar SODs and therefore shuffle the roles to allow standardization and knowledge transfer. That brings us to the audit trail readiness. What I've mentioned on the door, if the audit knocks on the door, you would want to welcome them with tea and biscuits instead of saying, here's audit again. So you want to make sure that all these controls are always evidenced or in a central location, such as the operation control platform of Payzaar that I think Sam will also discuss a little bit later. Some set up a certain SharePoint, a certain G drive, which could also serve the purpose. But you would want this to be standardized across the entire scope. And you want to always be audit ready. So whenever internal or external audit comes in, you can come now. And what I used to say to my team, a control that's not evidenced and therefore is not auditable is not a control. Because you can't show to an auditor that you've performed the control. I had an example of someone who said, yeah, I reconciled this input versus that output. Said, that's wonderful, great. Is it correct? Yeah, show me. Yeah, it was just on the fly in an Excel spreadsheet. I said, let's redo it. Let's make sure we evidence it, we SOD it, because we want to be audit ready. Now, that brings us to, I think, the overall summary slide, Sam. All right, so I love this slide. Thanks, Mika, who's our graphic designer, for creating it. Because this is kind of the payroll control framework on a page that you could take away to your own company to say, hey, this is what we do to ensure payroll results. And this is why we might need a little bit more automation. So just to recap, we've talked about pre-payroll controls, data preparation, which includes data input transformation, because as we know, we rarely receive the data in the formats and the files that we need it in. Data field validation, set the actual validation rules in those fields. There's manual data entry review. There's always going to be manual data, that's fine, but SOD it, systemize it. Then you go into those payroll approval controls, where you would have a variance, look at the dollar or percentage between two different periods and make sure that you can variance the periods that you compare it to, so the comparative periods. A threshold. You want to have automated data validation of input versus output. Do more with less or do more with the same, as we'd like to say, because you could consume more responsibilities within the payroll or consume more countries if you're doing M&A without increasing the headcount because you're automated. And you would want a payslip and GTN reconciliation. Now, then you want to have payroll outputs, the most important ones being the financial posting run, the account reconciliation. Then you move into payroll and payslip distribution as part of the post-payroll controls and our workflow stage, payslip distribution. You want to look at payment approval, so the net salary payment execution and the compliance payment execution. We then go to statutory filings that we've listed as kind of the compliance monitoring and the reconciliation against the GTN, because you want to make sure what's in the filing is in the GTN that ties to the payment. Oh, the GL folks would love you. And then overlaying all of this would be role-based access controls, RBAC, payroll cycle segregation of duties, and the audit trail readiness. Now, this, in a nutshell, would be your common global payroll control framework. And you would want to overlay this on your entire scope. If you're running payroll in-house, or if you're running payroll as an outsource, it shouldn't really matter. Because if we link it to the original design principles, you want to have global set of controls. You want to localize it as required, such as a data preparation, data field validations on a country-by-country basis, a automated data validation on the input versus output based on local nuances. Statutory filing, a common monitoring tool, but you want to do it in local filings. This spans across everything. So whether you're doing it in-house, whether you're doing it outsourced, this could be your global payroll control framework. All right, Sam, I think with that, I am handing over to you.
Yeah, sure. So, well, thanks, Max. And let me tweak my, there we go. Okay. Yeah, so as it says, what have we learned from this? Well, the main thing from my perspective is that you need tools, you need resources to be able to develop stronger controls, which therefore lead to stronger compliance, right? There are different approaches to achieving this. And what we do here is we try to enable this with technology, right? So now to conclude the presentation, what I'd like to do is I'd like to take you a little bit through how we do that, okay? There we go. Okay. So the first thing to point out is that we take a modular approach to payroll technology. What that means is that our platform is built in such a way that you can deploy the different components of it selectively to solve very, very specific problems, right? The advantage of this is that you don't need to do a big rip and replace transformation to fix what are, specific issues, right? So you can be surgical about it, and you can take only what you need to address a problem. The reason this works is because we've designed the platform in such a way so that it is source system agnostic, right? It is interoperable with anything. So whether you are running payroll in-house, whether you're outsourcing it, whether you're doing a mix of that, whether you're working with an aggregator, with an accounting firm, with best-in-breed local providers, basically whatever your arrangement is, the platform is designed to be able to be compatible with that, to be interoperable with that, to be able to consume data, whatever the source system of that data is, not just providers, but also your HCM, your HRS, HRIS, your HR subsystems, to consume that data, to parse that data, to standardize that data, so then you can act on that in a single location in the cloud. Can you see the next slide, Max? Because it's not showing up on my screen.
I do. It says how to enable this with technology.
Okay, good. Yeah, my presentation is conked out. I'm sorry. And now you can see the operations control one, can't you?
Correct. Yes.
Great. Sorry about this. For some reason, my presentation doesn't seem to be working well. But anyway, if I know what's on screen, I can talk about it. So getting into technology itself, what I want to do is I want to tell you about 3 functionalities here, right? So the first one is what you see on screen, which is operations control. And operations control is basically your global payroll command center. So as you can imagine from the images, because I think the images kind of communicate pretty well what it is, this is a workflow and process management dashboard for your international payroll, right? In the context that we're talking about today, which is stronger controls and compliance, ops control enables this in 3 ways, right? One, it enforces a standardized workflow across all of your countries and providers. So you're operating to the same standard everywhere, right? Two, it centralizes communication and document sharing between yourself, between your team and your providers. And it centralizes this all in one environment, right? So everything is trackable, everything is transparent. And three, it enforces designators and designated approvers and reviewers at every step of the process, right? So this is the segregation of duties and the review and approval process that Max was talking about just a few minutes ago, right? If you combine these things together, what you have is you have a very, very robust audit trail of your entire global payroll process, right? So you can see all the messages, you can see all the files, you can see all the changes that have been made to your data, who reviewed what, who approved what, et cetera, right? So you're going to have full visibility and attribution of every action taken, which makes it a lot easier to go through an audit whenever that is needed. Max, would you add anything to that?
I think that's a great say. What I say to a lot of people is that Payzaar remembers.
Okay.
So, which is not just us
Yes.
them, but it is the platform, right? There's a full audit trail. If someone made a configuration change, if someone approved something, if someone has a review ready for someone else, it kind of shows that type of review. There's a full audit trail, and then there's visibility.
Yeah.
Right? You also just want visibility. Move away from spreadsheet or G sheets that kind of show your whole payroll calendar. So I think it makes a lot of sense.
Yeah, that's true. We have a question here.
Oh yeah.
Someone's asking, is there a mobile app? Is there a designated mobile app to be able to process stuff? No, there is not a dedicated mobile app, but it is responsive, so you can use it on your phone.
Yeah, so I would say an app is almost an app is almost outdated because an app requires different type of sources. So what this does is you have access to this on any browser, on any device. And the way that you view it is tailored to whatever device you look on. So if you would be looking at this on your iPad, you would have a good user experience on your iPad. You just need to go to Safari or Google Chrome or whatever and just type in your normal credentials. If you would go on your iPhone, you would be able to approve payroll. So I think an app is a vehicle to be able to, when you're mobile and don't, for instance, have access to your laptop or whatever thing, you'll still be able to perform your actions.
Yeah, basically that. It's the platform is entirely responsive and it's compatible with any device you want. There's certain things you're probably not going to want to do on your phone. You're not going to want to download a spreadsheet to look through like a million rows of data because not comfortable. But anything other than that, you can do approval, review, and stuff like that. You can actually do a lot of review through the app because the review can happen within the platform because the data exists natively in the platform. You get to see it in the platform. Oh, and look here, we have another follow-up question. I think we have another question, which is, will this meet all data security requirements?
I'll probably answer that, Sam. So
go for it.
Yes, because the whole information security system around it is within the platform. It's a native built software as a service platform. To be able to log in, you would either need SSO. So if you would be accessing it through your bring your own device, you would need to go through your SSO, which is also a company decision. So is it secure? Yes. The way to access the platform is a company decision that we enable with whatever option. You could do SSO, so single sign-on. You could also do username password with very strong two-factor authentication. So yes, it would be able to do that. It's typically also a company policy, right? Our system is secure. The way that you use it or access it, we also provide an option to customers to be able to do that. If that answers your question.
Yeah, that's correct. So we have SSO enabled. They say thank you. Fantastic. Okay, so yes, we have SSO as an option. Obviously, two-factor authentication, and Payzaar is ISO 27001 compliant, also certified. So Yes.
All right.
I was actually going to move on to the. Yeah, go ahead. Were you going to say something?
Yeah, not sure if the slides refresh or not, but I think we also have a question in the webinar chat while you're
Oh,
maybe looking at that one. I can take that question while you're maybe looking at the slides.
okay.
So
Yeah, we do.
Rita,
No, go for it.
hey Rita, goedemiddag. Two questions. So one is, how do you see to do payroll calendar SOD in a small team? For instance, one person responsible for payroll in the country. All right, let me take that first question. So of course, this is based on my personal experience, which doesn't mean that that's the single truth. But what I've done in the past, which can also be done in Payzaar, is I would actually assign one person as kind of being responsible for a country, as in, if you remember the preparer, reviewer, approver, there would be one preparer who's kind of responsible for that country to make sure it flows end to end. And I would have a different reviewer. The preparer and the review should always be two different people. And ideally, the reviewer is someone from a different region or from a different country. So they would still be able to review it, which kind of plays into making the processes and controls standardized. And the approver should always be someone else than the preparer. Now, if you have a small team, the reviewer and the approver could be the same person. But the preparer should always be someone different than a reviewer and approver. That would be my answer to your first question, Rita. The second question is, how do you see control for an interface? For example, an interface coming from benefits. For what is payroll responsible according to you? Well, that's a tricky question. So sometimes there was a design principle at a company that I worked for before, is the people who send it is responsible for making sure it arrives. The one receiving it is responsible for making sure the one who sent it understands all the data requirements for them to send it. And they are responsible for, when they've received it, which would be payroll, to actually process it accurately. And I had a prior colleague, Olu Adelaja, I still love her. Hopefully she still loves me. I don't know, possibly, who had a great analogy around the same topic, Rita, on one slide on a bus, where data from benefits or whatever hopped on a bus, went to a certain station, stepped out, and moved into a different vehicle for payroll. So I think that kind of analogy is where I would want to leave you with, Rita, with that one.
Okay. We've kind of went off on a little bit of a tangent with the questions, but that's actually good, because I think that's very interesting, to get into like the nitty-gritty of this kind of stuff. But what I'll do now is I will continue. There's a couple more things I will show you, and then we can get to more Q&A if you want. Okay. Great. So the next thing I wanted to talk about, the next two functionalities I want to talk about, they actually go together. And they are variance detection and thresholds, both of which Max mentioned, throughout his presentation. I think variance detection is pretty self-explanatory, right? It's quite simple, really. The platform has the capacity to highlight, variance differences in pay elements between different periods, right? So this is entirely customizable. You can select what pay elements you would like to look at, what pay periods you'd like to focus on, and you are able to drill down to a very, very granular level and look at specific pay elements for individual employees if you want to, right? The other part of this functionality, and has the slide passed? It has, right? Yeah, I think it has.
I see data validation, Sam.
Oh, okay, so there we go. Now it's correct. Apologies. Yep. So the other part of this is what we call thresholds, which allows you to contextualize these variations better within your payroll control framework, right? So as Max explained earlier, depending on the requirements and the attributes of your business and its risk appetite, you're going to have different levels of tolerance to, variance between periods, basically. So what this allows you to do is to locate and zero in very quickly on outliers and elements that are outside of your accepted tolerance levels, right? And from there, you go through the process that Max described, where you have your decision tree and you decide whether there is a problem and how you want to address that. Okay. And to finish things up, oh, I see we have something else in the chat. Oh, okay, never mind. There we go. So to finish things up, what I'm going to talk about, the last point I want to talk about is data validation, right? So what data validation does is check your payroll outputs, so your gross to net, against your payroll inputs. Ideally, you want these to reconcile, right? So there should be no mismatches between them. But in reality, there's always going to be little things here and there, right? And some of those things are not going to be so little sometimes, and the impact they could have might not be little, right? So what data validation does is it automatically detects where there are errors and it highlights them so you can focus on fixing them, right? This is really useful because if you have a population of tens of thousands of employees, you're going to have lots of these issues to deal with. And by detecting them automatically, you don't have to search for them anymore, right? They're filtered and they're just presented to you, right? So what this means is that your team saves a ton of time on the review process, which allows you to do a better job of that, which results in higher accuracy overall, right? So just like operations control that we talked about at the beginning, this is also part of the review and approval process and the audit trail, right? So when you detect an issue, you can accept it because it is within, your acceptable tolerance levels. You can explain why it was accepted. You can comment on it, right? And that gets logged in the audit trail. Or you can reject it and you can have your provider do it again and fix it or make whatever changes needed, right? And I think that's a pretty good overview. So I don't know, Max, would you add anything else here?
Yeah, aside from, I've joined Payzaar for 3 months now, a little over 3 months. This would be the single most exciting thing that I've seen, and I can't stop accessing the demo. I actually did, because I'm kind of a payroll nerd. Last night, instead of doing Netflix, I was doing some data validation in the demo environment, just to accept those or look at those and think back of the days where I was still doing it in Excel. It's really nice, and yeah, I think thanks for the engagement of the people on the call. It's really good. I've just told Sam that I need to run at the top of the hour because my wife and I, we do have 2 small children. But tonight we will have a night out together, which is fairly rare with 2 small children. So I would need to run. I promised her to not talk about payroll. Not sure if I can keep the promise, but I want to thank everyone for joining.
Okay. Well, thanks, Max, and enjoy your dinner.
Thank you, Sam. Thanks, everyone.
Okay, so I think what we'll do is we'll wrap things up here. We're coming up on the hour, which is our dedicated time limit. I would like to thank you all for joining us today. I hope the presentation was interesting. It was useful. I hope you took away something from it and you learned something that you can implement in your own company. As I said, we're going to share the deck with you afterwards. So if you want to go through this stuff again, you'll have access to it. And the video will be posted on our YouTube channel. Once it's online, we will share the link with you also, so you can rewatch, share it with colleagues, friends, your boss, whoever it is. And that's pretty much it. So thank you, everyone. Take care.
Thanks, Sam. Thanks, everyone.